They began in the dark, where oil lamps licked stone and silence was an asset. Not in palaces, but in storerooms that smelled of grain and clay. A hand pressed a wedge-shaped stylus into wet tablets, one mark for barley, one for silver by weight, one for the interest that turned tomorrow into a line you could read today. The first bankers were not men with vaults. They were interpreters of promises. They counted, witnessed, remembered. When rulers swore oaths, these scribes made it arithmetic. In a world that feared drought and raid, the only magic was memory, and memory was written in clay. Mesopotamia taught the first secret. Money is older than coin. In the cities of Uruk and Ur, palace temples doubled as treasuries and courts of account. You deposited barley, you withdrew rations, you pledged collateral and paid in silver by weight. The tablet traveled, the grain often stayed put, and when debts strangled the harvest, kings proclaimed a margi, clean slates that extinguished arrears to reset the social body. A banker learned caution from this ritual mercy. The sovereign could erase the line, but never the hunger behind it. If you lent too hard, you starved the future that would repay you. If you forgave too late, you invited revolt. Balance was not ideology. It was survival. Down the Nile, the river rose and fell like a clock, and the clock was kept in the granary. In pharaonic Egypt, wheat and barley moved in and out of state storehouses in measured flows. Receipts issued to farmers and laborers became a second harvest, paper made from stalk replacing the stalk itself. The bureaucracy became a metronome, counting rations for pyramids, taxes for temples, wages for soldiers. Grain receipts circulated locally like currency, proof that a centralized store could turn perishables into claims that outlived the loaf. But famine revealed the second secret. A balance sheet cannot feed you if its inputs fail. When the flood came late, receipts converged on empty bins, and the math was a rumor. The first bankers learned to read the weather as closely as they read the figures. Across the sea, in the agoras of Greece, value began to travel lighter. A dozen city-states minted a dozen new identities in silver and gold, each coin boasting a face, a god, a weight, Athens' owl staring back from purses in Egypt and Sicily. But trade needed translators. The trapezitai, literally men at the tables, validated coins, swapped types, and made loans for voyages where a storm could erase principal and borrower both. Bottomry loans charged dearly because the sea was a courtroom with no judge. Reputation became collateral. A money changer who misweighed coin was ruined by rumor. A lender who funded successful voyages became a lighthouse. Banking emerged as choreography, weights, seals, endorsements, and a network of names that meant paid in every port. Rome annexed the choreography and added a bureaucracy. Its argentary took deposits, cleared payments, auctioned assets, and recorded obligations in daybooks that moved faster than wagons. Publicani, the tax farmers, advanced funds to the state in exchange for the right to collect later, proving that governments have always borrowed from the future while the ink is still wet. Yet the web could snap. In 88 BCE, amid war and confiscations, credit disintegrated in parts of the empire. In 33 CE, a subtle run in Rome's financial district forced debt cancellations and imperial intervention. Edicts limiting interest and ordering loans produced relief and resentment in equal measure. The Roman lesson had teeth. Law can force settlement, but it cannot conjure liquidity if trust has fled. When coin ran short, promises grew long, and when promises grew too long, metal reasserted its blunt authority. After Rome dimmed, sanctuaries of silver flickered to life in unexpected places. Monasteries counted tithes and guarded hoards. Christian usury bans pushed money lending to the edges, into Jewish communities that were tolerated when taxes were due and targeted when politics demanded a scapegoat, and into itinerant Lombards, whose very mobility was their insurance policy. Protection, prejudice, and necessity cross-wired a credit market that was at once indispensable and deniable. The first bankers learned a harder secret here. Power loves the loan, not the lender. It will bless you with privilege to secure your capital, and withdraw that blessing when the winds change. Then a militant order discovered that faith could standardize finance as well as the sword standardizes law. The Knights Templar became Christendom's most trusted vault and courier. A pilgrim could surrender coin in Paris and redeem value in acre with a coded draft that traveled safer than gold. Kings lodged treasuries in Templar strongrooms. Princes entrusted negotiations to men in white mantles who could move funds across borders with a speed no horse could match alone. But trust concentrated is a magnet for sovereign fear. In 1307, the French crown seized the Templars, extinguished an order, and repossessed the most reliable balance sheet in Europe. The lesson was cut in stone. Even impeccable books can be closed by a blade. Banking thrives in shadow and withers when the state decides the shadow looks like a rival. Italy rebuilt the craft in glass and ink. In mercantile Florence, Venice, and Genoa, the bill of exchange turned distance into a comma. A merchant could sell goods in Bruges and settle accounts in Pisa with a letter that bypassed coin entirely. Correspondent houses, one family with branches in 3 cities, cleared trade with a pen. Then came the mirror that made the profession self-aware, double-entry bookkeeping, described in 1494, a method where every debit had a credit, every obligation a witness. The Medici rose on this discipline, financing wool, papal politics, and princely wars with a web so dense that Florence glowed with borrowed light. But overextension, faction, and a reversal of favor at Rome turned glow into glare. The ledger could not abolish risk. It could only reveal the slope as the house slid. Banking had found its grammar and its temptation to confuse elegant sentences with durable meaning. The Dutch built a counter-temptation, discipline by design. In 1609, Amsterdam founded the Wisselbank, a public deposit bank that accepted only sound coin at fixed valuations and settled large payments in austere ledger money. It did not court depositors with interest. It did not lend promiscuously. By stripping out chaos, worn coins, clipped rims, regional cheats, it offered a neutral yardstick that anchored one of history's busiest ports and the East India Company's oceanic reach. For decades, the city's reputation rested on this mechanical honesty. Yet reputation, once comfortable, attracts accommodations. Over time, privileges bent rules. Quiet lending to favored actors blurred lines. War pressed, politics leaned. The very neutrality that drew the world's trust proved hard to defend against a world that prefers exceptions. London learned by watching everyone else make mistakes. In 1640, the Crown seized deposits from the Royal Mint, teaching goldsmiths that safekeeping required distance from sovereign appetite. They evolved into deposit bankers, issuing receipts that became transferable claims. The word note stopped meaning a reminder and started meaning money. When a nation of traders needed a national balance sheet, the Bank of England was chartered in 1694 to lend to the state and issue notes against government debt. Parliament, taxpayers, and bondholders forged an iron triangle. War could be financed without debasing coin, deficits could be rolled, interest could be paid. A managing mind had been added to money, but the South Sea bubble in 1720 warned that even managed finance can hallucinate. Shares floated on dreams. Ministers blessed the dreams. Courtiers sold the shares to each other until morning burned off the fog. Speculation, in partnership with power, is not a bug in banking. It is a recurring phase of the moon. By the 19th century, information moved faster than armies. Private houses, Rothschild Baring, used couriers and coded letters to arbitrate across borders and wars, turning intelligence into interest. A treaty signed at noon could be priced by dusk. They were not just lenders. They were weather stations for sovereign risk. Even such houses, however, could be surprised by a far horizon. In 1890, Baring's overexposure to Argentine bonds met a political squall threatening the firm and London's standing. A syndicate rescue, quietly organized, kept the network from fraying. In 1907, a liquidity panic in New York demonstrated the danger again. When private trust is the only backstop, even strong men sweat. The architecture of central banking, lender of last resort, discount window, elastic currency, emerged not from theory, but from nights when ruin felt close enough to smell. Across these centuries, the faces change, but the posture does not. The first bankers are always archivists of trust. They refine promises into instruments, tablets, tallies, drafts, bills, notes, ledgers, screens. And each refinement makes the instrument lighter, more portable, more powerful. Each refinement also makes it easier to lie. A grain receipt is a fiction if the bin is empty. A bill of exchange is a fiction if the distant house is insolvent. A government note is a fiction if taxes will not be paid and law will not be obeyed. The profession's secret is not aggressive leverage or clever collateral. It is humility before arithmetic and the sociology of belief. Consider what repeats. Sovereigns borrow the future to stabilize the present, and hope growth will bridge the gap. Credit expands until it replaces the activity it was meant to support. Crises expose hidden corridors where risk was warehoused, mislabeled, blessed by fashion. Then comes the familiar choreography. Freezes, rescues, scapegoats, promises of reform, and a return to normal where memory decays until the next crescendo. The Templars' vaults gave way to Medici ledgers, Amsterdam's austere book to London's elastic note, private syndicates to national banks, and now a digital stack of claims that can be multiplied with a keystroke and evaporate with a rumor. The coins look the same, the value doesn't, the paperwork looks the same, the backing doesn't, the screens look the same, the beliefs behind them don't. If there is a through line that explains how banker and empire bind themselves together, it is the politics of scarcity and the theater of certainty. Temples gave famine a ledger, Egypt gave floods a schedule, Greece gave exchange a grammar, Rome gave the law a cashier's window, the church gave sin a rate, the Templars gave pilgrimage a safety net, Italy gave commerce an alphabet, Amsterdam gave chaos a ruler, London gave war a bond market, and private houses gave diplomacy a credit line. Every system worked until it was asked to do more than it was built for. Every reform was a confession disguised as innovation. We have learned our lesson until we need to forget it. The origins remain secret only because we expect something more glamorous than a clerk's calm, a book's silence, a scale's fairness. But that is where the power lives. A banker who refuses a crooked coin, who tallies both sides of an entry, who insists that the warehouse be counted, not just promised, that figure is as revolutionary as a flag. The populations that prospered longest were those that honored this dull heroism. Florence, when its books were honest; Amsterdam, when its bank was boring; London, when its debt was disciplined. Collapse came when boredom was denounced as cowardice, when exceptions accumulated, when the theater replaced the accounting. We do not live in a world after the first bankers. We live in their experiment, stretched to planetary size. Our temples are server farms. Our ledgers hum in cold rooms. Our clerks are algorithms optimistically named. The same temptations hover. Overpledge the future. Politicize the balance sheet. Manufacture certainty for sale. The remedy will not be found in nostalgia for metal or romantic myths about barter that never really sustained an economy. It is found in relearning the old unfashionable disciplines. Match claims to real capacity. Price risk truthfully. Let failures fail where they must, so that the ledger remains legible for those who follow. A final image returns us to the lamp. A scribe in a temple storeroom lifts a tablet and wipes it smooth with water, the wrongs and rights dissolving into a new surface. He is ready to write again, and he is terrified because he knows that every mark carries a life. Seed for next year, wages for a wall, a dowry, a ration that keeps a child alive. The first bankers understood that money is not metal, paper, or code. It is the memory of obligation made portable. Guard the memory and the civilization grows tall. Corrupt it, and even the brightest capitals learn how quickly light fails. History doesn't repeat, but if you ignore the ledgers, they will close you all the same.